Hello my friends, welcome to my Energy Economist channel. We're gonna start today by knowing the investment in oil and gas exploration, Adnoc's strategy. So stay with me. In 2015 marked a downturn in upstream oil investment trends, which followed an upward cycle that lasted over a decade. Investments in exploration and production had increased sixfold since 1999, posting uninterrupted growth with the exception of 2010, when investments fell following a sharp drop in oil prices, and in 2002 when they were stagnant. Clearly, the main reason for this downturn is the drop in oil prices since mid-2014. But it should be noted that, even at the beginning of last year, many international companies were announcing strategic reorientations, favoring budgetary discipline and profitability over growth. Thus, declining oil prices have simply accelerated and amplified a shift that was already underway. This downward trend is expected to continue during 2016, albeit at a slower pace, following a moderate 3% increase in 2014 after 4 years of strong growth, 60% between 2009 and 2013. Investments in exploration and production are projected to fall 21% this year to approximately $540 billion, down by more than $140 billion compared with the previous year. This trend has been especially pronounced for independents, whose budgets fell by 34% compared with 15% for the majors, and only 11% for national companies (NOC). At the regional level, only the Middle East avoided the slump, with investments expected to rise by 3%, supported by NOCs, which represent approximately 70% of regional investments. North America and Europe suffered the sharpest declines, with budgets falling by 35% and 33% respectively. The pullback in investment in Africa, 22%, and the CIS countries, 21%, was fairly close to the global average, while Asia-Oceania, 15%, and particularly Latin America, 8%, posted smaller declines. Except for the Middle East, all regions worldwide posted a net decline in investment, with relatively marked regional differences. Note that there seems to be an inverse relationship between the relative weight of NOC investments and the extent of their decline in a given region. North America and Europe, where NOCs have a small presence, aside from Statoil in Europe, suffered the largest declines, while Latin America and the Middle East, where investments by NOCs represents between 70% and 80% of the total, were less affected. The Middle East even posted moderate growth in E&P expenditures. Declines in other regions, where NOCs represent between 40% and 60% of investment. The worldwide average was 45% in 2015, fell within the middle of the range. As it accelerates delivery of its 2030 strategy, Adnoc will optimize its upstream operations and drive solutions to maximize recovery from its mature reservoirs, while seeking ways to cost-effectively unlock the potential of untapped resources. Adnoc's key strategic investments program, according to which it plans to spend over $108.9 billion over the next 5 years, has received the approval of Abu Dhabi's Supreme Petroleum Council (SPC), even as the oil and gas company expands its 2030 strategy aimed to unlocking, creating, and maximizing value and ensuring smart growth in its upstream and downstream businesses while strengthening market access. The SPC also approved Adnoc's plans to explore and appraise Abu Dhabi's unconventional gas resources, as the company seeks to enable future value creation from its untapped gas resources. And the SPC gave the green light to Adnoc to pursue international downstream investments. Dr. Sultan Ahmed Al-Jaber, Minister of State and Adnoc Group CEO, says, "This marks the next phase in delivering our 2030 strategy, which will contribute to further maximizing value from all our resources, introduce new and significant partnership opportunities, and enhance our capabilities to diversify our portfolio of products as we aim to expand into key growth markets." As it accelerates delivery of its 2030 strategy, Adnoc said it continues to optimize its upstream operations and drive solutions to maximize recovery from its mature reservoirs, while seeking ways to cost-effectively unlock the potential of untapped resources and leverage technology economies of scale to keep the operating cost per barrel at the most competitive level. It remains on track to expand oil production capacity to 3.5 million barrels a day by the end of 2018 and to improve drilling time by 30% by 2019. The company noted that its enhanced efficiencies have brought Adnoc's low production cost down even further, a factor driving interest in the upcoming offshore concessions, which have attracted more than 14 potential partners from across the world. In gas, Adnoc is focused on ensuring a sustainable and economic supply of gas for the UAE's growing demand. To help achieve this, Adnoc will access undeveloped tight reservoirs, tap into its gas caps, and expand sour gas production. In addition, it has started an acceleration drilling program to explore for and appraise the potential of individual gas deposits in tight reservoirs. Adnoc plans to secure additional captive crude processing capacity in growth markets, establish sector-specific global businesses, and enhance its global marketing activities, including introducing non-speculative asset-backed trading to further stretch the dollar from every barrel of oil it produces. In support of its expanded 2030 strategy, Adnoc will grow its crude refining capacity by 60% and more than triple its petrochemical production by 2025 through a staged expansion plan aimed at initially optimizing its existing assets to grow and diversify its products portfolio. Aromatic projects will convert naphtha, which is currently exported, into gasoline and aromatics, and a large project to enhance the crude processing flexibility of its 900,000 barrel per day refining system will be taken forward. Delivery of Adnoc's expanded 2030 strategy builds on three changes it has made to the way it operates. It has expanded its approach to partnerships to capitalize on growth opportunities, enhanced its capital structure to more smartly finance its business, and revised the way it manages its portfolio of assets to drive performance and unlock lasting value. Adnoc offered a minimum 10% stake, or 1.25 billion shares, and a maximum 20% stake, or 2.5 billion shares, in the portfolio IPO of Adnoc Distribution, its fuel distribution unit, the Adnoc Distribution IPO, which will be the first time Adnoc has placed shares of one of its subsidiary companies onto the public markets, offers both UAE and international investors the opportunity to invest alongside Adnoc in the region's retail brand. Meanwhile, Adnoc and Borealis, the joint venture partners in Bruges, have signed a framework agreement in which they will advance projects that will expand and add value to the downstream petrochemicals business of both companies. This comes in the context of Adnoc expansion of its strategic partnership over its value chain as part of its 2030 growth strategy. Tightness in the gas market is leading to upward pressure on ethane costs, at a time when naphtha-based production is enjoying lower costs due to lower oil prices. As the region's petrochemical industries compete with power generation and other industries over gas supply, some petrochemical producers are choosing to increase investment in naphtha-based petrochemicals production. The UAE is doing this by focusing on mixed feed crackers. Competition is growing among the Emirates for investment in downstream industries. Abu Dhabi and Dubai are considered established petrochemicals hubs, with the former advantaged by cheaper labor and electricity costs. However, Dubai is regarded as possessing a superior port infrastructure at Jabal Ali. The other 5 Emirates are also receiving increasing attention where cost of production is cheaper. Rising feedstock prices, limited ethane feedstock availability, increasing construction costs, and the anticipation of slower demand growth in key markets are expected to lead a decline in the number of new project announcements. A significant risk factor for the UAE's petrochemicals industry is its current reliance on naphtha feedstock. If you want to learn more about the investment in oil and gas exploration, Adnoc's strategy, you could do so in my book, Economic Study of Oil and Gas Exploration, which is published on Amazon. Check it out at the link in the description. Please take a second to hit the like button, hit the subscribe button, and don't forget to also hit the notification bell. Thank you for watching and goodbye.